The whole crypto market has been driven by adoption, right? And so we're getting new investors in, a lot of it being like US macro-based investors, and they're starting to use Bitcoin to hedge out inflation.
So you had these people, these retail investors, getting into cryptocurrencies for possibly all the wrong reasons. They got into it because of the fear of missing out. They got into it because they wanted to get in to make the money.
I bought Bitcoin in 2015 for the first time, and then sold half after the all-time high in 2017. So it was the beginning of 2018 that I sold at. I think it was 14,000 on average, 13, 14. So I missed the all-time high, which is okay. And then reinvested that half that I sold in, well, just before I published the article in 2019. And I wish to repeat that with my own money and the friends and family's money. I don't consider myself a real Bitcoin OG, by the way, because I read the white paper for the first time in 2013. So I missed the first 5 years, and those seemed like the real cowboy years where the big changes happened. But I see the Bitcoin market as a very small market still. It has grown, but I mean, when I wrote my paper, it was under 100 billion. So it was 60 or 80 billion. When I started investing in 2015, it was even smaller. If you're used to trade and invest in the bond markets and the equity markets and all the very large derivative markets, the interest rate swaps, etc., mortgage portfolio, structured finance, it's all in the billions and billions per deal. I've seen Bitcoin grown over the years. So especially 2017, when the futures came, that was a first step. And I want to tell something about futures, because a lot of people are scared about futures, and they think that they will be used by governments to manipulate markets, etc. But for me, as an institutional investor, it's a sign that the market is getting more mature, like an option market. For example, as an institutional investor, I wouldn't invest in a market where there's not a futures market, because a futures market is another way of getting rid of your exposure. Instead of selling the asset, you can go short the future. And for example, if a market is closed, because that sometimes happens, right? That's a great thing, because that opens up the entire market for more players, more farmers, if you will, in the Roman example. So yeah, I think it's great. And we'll see a lot more maturing of the market with spot ETFs, which will come, with countries entering, with central banks putting it on their balance sheet as a currency. I think the on-chain analysis, for me at least, is most valuable in identifying tops and bottoms. So identifying FOMO transactions, if you will, at around the all-time high, and panic liquidation kind of reactions or transactions in a bear market, the bottom of a bear market. I could not say what the top of the market will be right now, because we're not in a FOMO situation. So at least I know we're not in a FOMO situation, so it is not the top. But I don't know when the top is, and that's that's of course the difference with the stock to flow, more fundamental model that has gold data and stuff in there, that you can very, very roughly say something about the level. So at least I can say we're not in a bear market right now, and we're not at the FOMO end of the bull market. So we must be somewhere in between. Given that fact, I would extend the current uptrend with a couple of months. The next 2 months are very well known. I think we will end in the roughly at 98 this month already, which is huge. Nobody believes it. And then 135 in December. But still, I think we'll go on in Q1, because that's another thing you can measure from on-chain. You can see the shortage that we're all talking about. How many Bitcoins are there? And you guys are really looking at coins at exchanges, and are they leaving exchanges to cold storage or coming at exchanges? You see that shortage building to a moment where it pops. We're still months away from that popping moment. I think we'll see a bull market that goes on for at least 6 months and bring us in the 100,000, 200,000. I wouldn't even be surprised with 500,000 Bitcoin in early 2022. But when we get to the sketchy part, when the FOMO transaction flow in, and you can detect those transactions, they are very distinct, then well, we have to all be a little bit more alert, right? What is hyper-Bitcoinization? What is a cycle? And when will it happen? Because that's for an investor, of course, the important thing. But yeah, I look at it a little bit different. From a pure investment point of view, I would say first that drops of minus 50% and minus 80% will happen again, just because the volatility is in the market. You know, we had a minus 50% drop with a mining ban thing a couple months ago. Not a really big event, but still a structural event, and then but minus 50%, right? So things like fear and greed in investors and people will be here to stay. Humans will not be different, and they will freaking out again when maybe the US bans it. Well, I don't think that's not going to happen, but something will happen. The introduction of the central bank digital currency, the tightening news of know your customer, and you can't exchange it to fiat anymore, whatever. Some bug, some big entities selling because they don't believe in it anymore. I don't know what the trigger will be, but there will be panic and people will freak out. Liquidations will come, and it will drop down. Yeah, I think that's part of the market. That's part of the charm as well of Bitcoin. So that will happen. That's the one thing. So greed and fear are here to stay. Minus 50%. We just had that. Minus 80% wouldn't surprise me. The second thing is, yeah, I reason from stores of value. So alternative investments. If I have a large sum of money, what are my alternatives? So it's equity, it's bond, and if you look at the commodity space or the non-financial asset space, it's gold, and it's real estate, basically diamonds maybe, but yeah, and so that's of course the stock to flow X model. I'm reasoning like an investor, like why would I put my money in real estate, or why in gold, or why in Bitcoin? There are several aspects to what makes a store of value or money better than another one, and one is the visibility, another is portability, you know, the classic fungibility, and scarcity. So I am not surprised at all that the real estate market is just so much bigger, larger than gold market, and I'm also not surprised that Bitcoin is a little smaller than the gold market. But as soon as Bitcoin, after the next halving, or really this halving, we should get really close to gold market cap, and after next halving, it would really surprise me if an asset that is recognized by the market as a store of value, that has, say, more than $1 trillion in value, if that store of value with bigger scarcity than gold would not at least be valued higher than gold. So somewhere between gold and real estate, 10 trillion and 100 trillion roughly.